traders, this is Greg McLeod from the Elite Traders University and My Market Heat Map, and welcome to another edition of Bears versus Bulls, the weekly Forex forecast. And it's so good to be with you here on this beginning of the week beginning January 22nd, 2023, and we're going to go over the markets and see what is going on for this week, and we're going to plan ahead. So this is your opportunity to see what I'm thinking, what I'm looking at, and what's catching my eye in the Forex market. Okay, so before we get started, I want to go ahead and direct your attention to the risk disclaimer on your screen so you'll understand all the risks associated with foreign exchange trading. And this is we bring you this from Elite Traders University, and we're going to go ahead and get right to it. Let's go ahead and share our screen here. Share our screen. And let me make sure that we've got audio good, testing 1 2 3, and make sure that we have everything going well here. Okay, so we're going to hide a risk disclaimer, right? And we know what we're actually going to be talking about, the Bulls versus Bears, right? And so we're going to get right to it. My Market Heat Map is my top secret tool for learning more about the market, for analyzing the market. It's a financial scanner, tells you what's hopping, what's popping, what's dropping in the market. And let's go ahead and take a quick look-see. We're going to start with, first of all, if you look at my market heat map, like right now, market's kind of flat. So if you're looking at some of the things, it's all gray. You look at all Forex currency pairs, not much life going on right now because it's about 7:41 p.m. Eastern time, okay, on a Sunday. So not much is really moving. But there are powerful trading tools we can use to analyze the market ahead of time. So let's take a look at the economic calendar for one thing. And the economic calendars are our cue to tell us, what currency pairs are going to be active. Knowing what to trade is very, very important. Just because we like the euro or we like the Aussie Swiss doesn't mean that it'll move that week. And how many times have you ever been into a trade into something you thought it was moving and it wasn't? And most things that move in the Forex market are driven by news. Either news leading up to the actual announcement or the actual announcement itself, or just right after the announcement. All those provide, think of news as a giant rock, and the rock lands into the water and creates a ripple, and that ripple creates all kinds of waves and motion. So when the news is released, it causes that particular currency or stock to move, okay? So we're going to use economic calendar, and it's really simple, okay? I know there's a lot of numbers and things that may seem a little bit complicated for the new beginning trader, okay? But don't be afraid of that. All we want to do is know what is being announced and the country that's going to impact and the currency that's going to actually take effect with, right? And I'll give you a key on that. So first of all, we're going to sort these by high impact news items. And so we can filter that out on my market heat map. And we're going to look at things that are going on this week. And it's really cool because it's organized by flags and time, right? So when you see the European Union flag with the stars in a circle like that, that news is going to impact the euro. But the euro is considered the anti-dollar. So it's also going to impact the US dollar pairs as well, like dollar CAD or the dollar Swiss franc, okay? So we have the ECB bank lending survey that's high, and we don't even know what that is. You might say, well, Greg, what's a lending survey, and what are they surveying? Where are they finding? That's not important. The important thing we know, it's a high impact item that other traders who are a lot smarter than we are going to be looking at it, which means they're going to place a value on it. And a lot of these guys already have inside information. They already know what this report is going to do, and they're going to be positioning themselves ahead of time. Now, if you're in mentorship with me, you know how we can read institutional order flow using our pip and run compound day trading approach, that we can actually anticipate what these guys are going to do, right? But if you don't, you can still benefit from looking at these announcements and just waiting an hour after the announcement comes out, because then you can see actually, usually prices kind of snap back. And I talk about that in my free masterclass. If you click the link up there, a free Forex masterclass, www.4pillars to 6 figures, I will tell you about the rubber band strategy, the strategy which a lot talks about the snapback in currency pairs, right? When the news comes out. So make sure you register for that, and then watch the video, and it'll tell you all about it. Now we're going to be looking at the euro. Now we'll look at some technicals. So many of you are like looking at support and resistance and those things, and we're going to talk about that as well on this telecast. So just stay tuned. We're going to talk about the fundamentals that are the wind that drives the sails of these boats, these Forex, these currencies boats, right? These boats floating in this pond of liquidity, right? So the news is the wind, the currencies are the boat, right? And we want to know what direction to sail this boat. And then the flag tells you which boat's going to move, right? So here's the British flag, GBP. And that will cover like GBP JPY, or the pound yen, or the pound versus US dollar. Because remember, we trade currencies one against the other, okay? The relative value of one currency versus the other. So think of it like a boxing match between two boxers, okay? And the whole idea is we want to pair a very strong boxer with a very weak boxer, and we want to bet our money on the strong boxer. You could do that. You could do that in Forex, right? So we want to take the strongest currency versus the weakest currency and put them in the boxing ring, and then bet our money on the, so to speak, on the stronger currency. Okay, so here we have manufacturing PMI coming out for the UK, the flag that's there, and the manufacturing PMI. We look at the previous number was 49.9. Forecast call for a drop to 49.6, and so whether the actual number really doesn't matter, is that at 4:30 a.m. Eastern time, we need to be looking at the pound currencies, and we can use the heat map to see which ones are actually flashing green or flashing red, and gives us an opportunity to either trade long, buying, or trade short, which means to sell. Okay, at 19:30, which is 7:30 p.m., we're gonna have Australian data coming out, the RBA trend mean CPI. Anytime you see CPI or I, you're talking about, or CPI, you're talking about consumer price index. And when you think of index, let's think of inflation, right? It's going to really look at the inflation the amount of inflation that the economy has. And the previous number was 1.8%, and they're looking for a forecast of 1.6%. And a drop in inflation actually is bad for the currency. So it could mean that the currency could fall, because many people like having higher interest rates, and because they can invest their money and get a good return. But if the interest rates aren't, let's say you have two banks. Bank A has 7% interest rate they're going to give, and don't you wish? And Bank B has 6%. Where are you going to put your money? Bank A or Bank B? Oh, I think I'll put it in Bank B because it's less. It's like, no, you usually want to have more interest, right? So you put your money in Bank A, right? So think of these currencies as banks, and when inflation is high, their currencies usually go up in value, okay? And if inflation is low, that means that their interest rates are going down and makes their currencies less valuable, okay? So, but we're just looking at, we're going to be looking at the Australian dollar at this time. We're not going to look at the pound because the pound flag is not shown here. We see the Australian flag shown here, okay? So we want to look at the flags as a way to know what to trade when we get into the market. It's really simple. It's like colors and shapes and patterns, really simple, like basic kindergarten stuff. We look at the flag, and that's the flag we want to trade. We want to trade Aussie pairs, Aussie yen, Aussie dollar, Aussie Swiss, okay? Okay, now let's go to Wednesday. Very simple. Oh, look at the flag. Oh, this Wednesday is very simple. We could call that Canadian Day because all the flags are from Canada. Canada has the red maple leaf in the front of it. Take off, you hoser, right? The Great White North. Okay. With the Bank of Canada monetary policy, high. Bank of Canada rate statement, high. Bank of Canada interest rate decision, very high. In fact, interest rate decisions are the most powerful ways of moving the market when they raise or cut interest rates. It's widely expected for them to raise interest rates from 4.25% to 4.5%. And so that would make the Canadian dollar go higher versus all of its counterparts. So let's say we're trading the Canadian versus the Japanese yen. Well, we probably want to be long CAD yen. And we'll look at the technicals to support this. But basically, Bank A is going to raise rates from 7% to 8%. And Bank B has negative interest rates. Where are you going to put your money? Bank B with negative interest rates, such as Japan, or Bank A, where the interest rates are going higher. In this case, from 4.25%, they're forecasted to go to 4.5%. Okay? You'll probably put your money in the bank with the higher interest rate, which is Canada. And we would not put our money in the Japanese yen. This goes back to our boxer analogy. We take a strong boxer, a Canadian, and put him in the same ring with the Japanese yen, which is weak because it has negative interest rates. So if you put those two together, do I want people to take money from me with negative interest rates, or do I want to invest in a currency in which I'm getting 4.5%? Oh, let me think about that one. Where would you put your money? It's very obvious what you should trade, right? However, past performance is no indication of future profits, so you have to do your own homework. But logically and intuitively, this is what would happen during the market. Okay, again, this announcement comes out on Wednesday, January 25th. It's going to be at 10 a.m. Eastern time. So we should see very big moves in the Canadian dollar versus other currencies. So you might not want to trade the New Zealand dollar, considering that the New Zealand market is closed, unless you're trading New Zealand CAD, NZD, CAD, when you're pairing a very strong currency versus a weaker relative currency. Then you'll probably have a really good opportunity if you trade the Canadian dollar during this time period. Okay, hope that makes sense. Flags, the country, what you're going to trade. It's very simple. Okay. Now I've actually had an incident where we had perhaps it was a New Zealand rate decision, or maybe a New Zealand some type of retail sales number, and then I said, well, the New Zealand dollar is in play right now, and so we should get in because, or at least look at that currency because that's the one being discussed right now. And then later on, 5 minutes later, I had someone actually text me and say, gee, I'm trading the Canadian dollar, it's not moving. I go, yeah, because the flag is not the Canadian dollar, and it is in the Asian session, and Canadian banks are closed. So I don't think you're going to make very much money in a currency where the market is closed and the data is not about the Canadian dollar or Canada, right? So sometimes it's common sense, and you just gotta but if sense isn't common, then you got problems, right? Anyway, you get my message, right? Let me know in the chat box if you understand this, or it's coming across you that it's because sometimes this stuff can be very confusing, and sometimes the confusion comes because it's so simple that we miss it. Moving right along to Thursday, January 26, 2023. Now, also given that my background is middle school education, so many of you are probably saying, well, I'm a professional, blah, blah, blah. I am speaking to the lowest common denominator in our audience, and so it may be very basic for you, but this is probably exactly what someone needs out there, and that's okay. So anyway, no matter what level you are, you can benefit, especially when my students are doing 90% win rate and 60% ROI. I think it pays to listen, right? So you can sound really smart and not make any money, or you can keep it really basic and simple and make a ton of money. Which one would you rather? Sound smart and be broke, or be basic and be rich? Your choice. Okay, because it's not about ego here. It's about results. Okay, going to Thursday, January 26th, we have, USA, baby. USA, USA, USA. Lots of American flags, but guess what? You don't want to trade US pairs. Okay. You want to trade the euro. The euro. Greg, what you talk about? You just talked about flags, Greg. You just talked about follow the flag. Follow the flag. I got it. I got it. I'm gonna trade dollar yen. No, don't do that. Don't do that. Okay. Because what you want to do is trade the euro. Okay. Why? The euro is the anti-dollar. They created the euro, the European currency unit. It came to the market in 1999. It's actually been around since the 70s. But then that's when you had the lira and the peseta and the French franc and all this other stuff. And they got rid of all their currencies and combined them into one, the European currency unit. And in 1999, January 1st, 1999, it was released, right? And it was created as the anti-dollar. That when the euro goes up, the dollar goes down. When the dollar goes up, the euro goes down. So if I show you a chart, they're diametrically opposed. There's a 50-cent word for you word geeks out there, that they move in the opposite direction. They're negatively correlated. That's another 50-cent word. Hey, that's a whole dollar you got so far on vocabulary right now, right? And I got a British pound for you too if you want one. Boom. All right, anyway, moving right along. So we're going to trade the euro for Thursday. Euro. You might want to use dollar Swiss. I have a truck driver named Everett. And hats off to you, Everett. You are a true American hero there with your doubling your demo, doubling your live account. You're just a doubling fool. You're just awesome, Everett, in Arlington, Texas. A big shout out to you. So you don't have to have a math major or be a Google employee or ex-employee or Microsoft in order to get this. A truck driver can double and triple his account. So can you. Okay. So gross domestic product, or GDP, is the total amount of economic output of the United States, and that is it's actually a lagging indicator. It used to be really a big number that people would watch. But it's kind of faded as far as its symbolism. But we're looking for a drop from 3.2%, and it's been revised. Actually, there was a revision on that. It was actually revised up from 2.6%. So they got it wrong. I don't know where they messed up, but it was 2.6% last month, and now it's actually 3.2%. So it was revised higher. However, the forecast calls for 2.6%. For the advanced GDP quarter on quarter. And now that there are a couple of things there. You think, oh, wow, that's going to be bad news. That's going to be bad for the US dollar. And not really. Bad news usually means the dollar gets stronger. This is going to be another bonus lesson here, okay? Other currencies like the Canadian dollar, Australian dollar, the pound, the euro, will rally when there is good economic news in their countries. Okay, you got that? Very simple, right? So you say, okay, great, Greg. If there's great U.S. data, the U.S. dollar goes up. And the answer is no. The U.S. dollar is the reserve currency of the world, and they use dollars to buy bonds for safety. So in case there's danger, a missile launch, an invasion, a pandemic, something crazy going on, a financial collapse or anything, a terrorist attack, a revolution, an assassination, anything bad, the dollar will strengthen. People will run to the dollar for safety because the bond market here in the U.S. is very large and very liquid and can hide people's money, and we guarantee their principal. So during times of economic upheaval, the dollar actually rallies, right, on bad news. So bad news for the U.S. economy would cause the dollar to actually go up. If we have good news like higher GDP, higher durable goods orders, well, guess what? The US dollar goes down and all the other currencies, except for the yen and the Swiss franc, go up, okay? So I know it's a little bit twisted, but you can see why, having good economic news is actually good for other currencies, including crypto, including Bitcoin and Ether and all those other, alt currencies will rally when the dollar is actually going down, and going down on good U.S. economic news. Okay, so that is that's how that actually operates. So if any of these numbers comes up better than expected, okay, look for the dollar to fall, look for the euro to rally, look for the pound to rally, look for Australian dollar to rally, look for these are risk-on currencies that benefit from positive U.S. news. The U.S. dollar knee-jerk will, because there's some amateurs out there who go, oh wow, and then you'll see it'll whip up and then it'll whip down, it'll spike it, it'll take the orders out on the top and then head south, right? So risk on. The U.S. dollar goes in the opposite direction of the stock market as well. So if you're an S&P trader or NASDAQ, SPY, if you're trading any of those indices, you want to watch the U.S. dollar. Okay. In fact, that's one of the strategies that was at one of the brokerages I used to deal with, where they just basically put the U.S. dollar up against the SPY, and whenever the U.S. dollar was starting to go up, they were selling SPY, and if the U.S. dollar was going down, then they're buying SPY, right? Why? Because you need dollars to buy stocks, right? You trade your dollars to buy stocks or stock indices or whatever, or gold or silver. You're exchanging it's stock versus USD. You're trading your dollars, like for milk. If I'm long milk, short dollars, right? Because I'm exchanging my US dollars to buy a gallon of milk, okay? If I had MLK if I made it into a currency pair, it'll be MLK / USD, right? And I'm pouring more dollars out in the economy in order to gain my milk, right? Milk goes up, dollar goes down because you have an increased supply of dollars. Okay, so into economic lesson 101. If you found that helpful, let me know. Let me know if this is the kind of information I drop on my mentorship students on a weekly basis, and I'd love for you to be part of that, and not just get piecemeals here, piecemeals there. Sometimes I don't feel like recording these videos. Like I'm missing the football game right now. What the Dallas Cowboys versus I'll probably do more videos after football season's over. But definitely want to get this information out to you because there's a lot of really, really serious announcements coming out. Okay, let's get right into. In fact, I'm just going to go by in order. We do have some Japanese yen. We have some yen policy statement on Sunday, very soon, in fact, or we actually had it. I'm not going to cover that. Japanese news, I don't care how high it is, sometimes doesn't mean anything. We're just going to go straight to the euro or the dollar index. And I'm just going to go to the US dollar index. The dollar index is a basket of currency pairs, currencies arranged by percentage change here. We remove all drawings here, and then I'm going to go to a daily chart. We're going to go to the DXY, the Dixie, as it's called, basket of currencies, and then we can see that I said that, hey, we would break this low and we can get to support, and it says here we are. It took us a while, but we got there when we're back down at the 101.77 area on the US dollar index, and we've been correcting a lot since the high that we hit back on September 28th. We had a high right there, about the 114 area, 114.74, and we've been pulling back, right? But we've been pulling back. The overall trend is up, right? However, the current intermediate trend is down, right? And so we are also running against probably some type of Fibonacci support. So we took our Fibonacci from the bottom to the top, and now we're here like Drake song, the old Drake song. When we're at the 50% Fibo at 101.97, 101.77. So we're hanging around this area, right? So usually when we come to a Fibonacci, which is 50% of this move, right? We're gonna measure this out and measure this from the top to the bottom. You know, this is how tall it is, and we go to half of that, 50%. And usually at the 50% level, we see some type of reversal or profit taking on the shorts, or buyers step in, and we can actually see the dollar rally from this area of what we call Fibonacci support, because it's at what we call the halfback, not the halfback in football, but we're half of this run that we had from the bottom from January of 2021 all the way to September of 2022, and now we're halfway down from that period. Now, sometimes Fibonacci's are kind of tricky, because you think, oh, it's like green eggs and ham I am, Here I am on the 23% retracement, but I don't like the 23% retracement, says the Fibonacci. And then it says price. Price goes down to 38% retracement. Oh, I don't think I like the 38% retracement. I tasted it, I don't like it. I don't like it. Okay, how about the 50% retracement? Bears or bulls, do you like the 50% retracement? It's kind of tasty. Lick it some more. And then we get a bounce. We might get a bounce here. And the bounce from here would mean that the dollar would rally, right? And the other currencies versus the dollar, like euro dollar, pound dollar, Aussie dollar, Kiwi dollar, would be going down, or just the opposite, right? And in fact, so we look for a rebound here. Not many people could trade the dollar index. I know I don't. You can on some platforms, but what we want to do is trade the anti-dollar, and that's the euro. In fact, that's the news that's coming up. So we go EUR USD, and we're going to go to there, right? And boom. And then we're going to I'm going to remove all drawings, start from scratch, right? And so we rallied, right? Really rallied off the low of 95.38. Can you believe that? It was a low that we haven't seen over 20 years. And then we do the same thing. We go from the top to the bottom. We draw a fib. We play the Drake song backwards from the top to the bottom, and now we're here. It was there we go. And we see we're closing in on the 50% retracement. We're not there yet, but we figure the same thing, that we have price the euro, that this is the length of the run. The move from the top to the bottom is this much in height. We can even use a ruler tool to even figure that exactly if you want to see that. And so we went about 2,800 pips. Half that would be about 1,400, right? So yeah, 1407 or so. So that's the halfback, right? So we're at the halfback. And we also have a lot of congestion over here. And so we expect price to kind of and there's whole number, round number, 1.11000. So we've got maybe a congestion zone right there that could, take price or stall it out. It's, we take the high and the low there. So we've got maybe some type of a supply zone right in that area, the 50 back. So wherever you use supply and demand zones, the Fibonacci, or any other type of supply of resistance area, we can see that we are approaching a 50%. If we were to use Fibonacci expansion and triangulate from a high to the low, right? Then our projected target 1.618, we blew through that. 2.24 is at 110.79. We might have a little bit more to go into this area. But the euro seems to has more room to go up than the dollar has to go down. So bulls versus bears, going back to the pound, going back to the dollar, I am actually bullish the dollar. Here I'm short-term bullish here. And if I have we have our neon I'm short-term bullish here, but I'm medium-term bearish on this pair, right? As we approach this area, right? We need to see some additional confirmation, though. Like a trend line break. We were accelerating. The angle is getting steeper, and so that is telling us that we could see some more, a parabolic move back up into the whole number round number. We could possibly see a move. The trend is still up for the daily. We drop to a 4-hour chart. We can see that we had a flat correction and the green candles pushing higher. We have a flag pattern, and the flag pattern indicates that we should go higher, right, in the near term. So let's keep on going. Let's go to the next one we have coming up. We do have we have Canada Wednesday, Tuesday. Yeah, we have flash over this PMI, which is also US, but we have Kiwi, actually a New Zealand CPI quarter on quarter as well. Let's take a look at the New Zealand dollar. And we just had the Prime Minister of New Zealand resign, and that had taken the New Zealand dollar back for a bit, but then it has since recovered very strongly, right? Very strong. I mean, we hit this area here on Thursday, and then now we're back up and we're barreling north very smartly. In fact, bulls versus bears, I suspect that we would, I'm going to remove all drawings here. I would suspect that we would move. I mean, we're at a topping area, but we also have an inverted head and shoulders. There's probably room to run here in the near term to 65.71 or so. That would, as we are breaking current resistance here at 64.93. We just closed above it. That's a very bullish sign that we would continue to move into this air gap to this high near the 66 spot 6600 area. So bulls versus bears. I am bullish on the Kiwi dollar, right? Especially if the CPI prints hot. Is expected to fall from 2.2% to 1.4% quarter on quarter, but year on year numbers are probably still going to hold up. We still have stubborn inflation, and we'll see. There is a possibility of a double top here, and so we want to watch what happens. We draw a trend line across the lows here, and if this is a true double top, we would have a break of this trend line, and we would see prices actually drop. But until we see that, then we trade what we are seeing right now, and we see prices maybe continue to move to the next level of significant resistance at the 65.71 area. Okay, moving right along, we have some Australian data coming out as well on Tuesday with CPI. Again, the CPI is expected to fall. Falling CPI could be seen as bullish for the current area, bullish for the market too, bullish for the stock market, the Australian stock market. Might not be so bullish for the currency, but let's just take a look. And we're going to go here, and we can see a similar story. Higher highs and higher lows. We have an uptrend, and we have an uptrend. We're not trying to guess when this thing is turning around, especially when we have very strong candles. This kind of, bulls versus bears, Australian dollar. I am a bull. Until we get into this area here, right? We have some resistance coming up, and so 71.42, and also we have the old high that we had about 4 days ago, 70.67, right? So we could see a rally up into that area, right? Very, very simply, right? So any pullback you see on the lower time frame chart, you know, you might want to use that as an entry. Use your oscillators. Like we got a nice bounce, and then we can see what we're probably heading back toward old resistance, filling in. It's like a Valentine's heart where we had the the Valentine's heart. We whatever we did on the left side of the chart, we refill back on the right side of the chart and fill all these red candles, these gapping vertical candles will get filled. The gaps will get filled, and we should see that 70-67 area get filled this week. Okay. Oh, you can't see that because I got this bull here. Get out of here, bull. Oh, bear. Bye. Hide. Okay, yeah. See, from here, right there. Okay. So we're at 69.87. We can see a move towards 70.67 this week. Okay. And let's go to our next one. We're going to go to GBP USD. And we can look at any GBP pairs. But we have a similar story playing out where, we might still have some dollar weakness or sideways movement, right? Because what we pulled back, we go back to our daily chart. And look, we have stacking green candles. It's just stacking. And, a very fast truck. And we have a little bit of resistance there. The distance from 24.24 to 24.49 is about 20 pips. But if we break that, we can break into these red candles that we dropped straight down. And usually prices come and fill these gaps. In Forex, you don't really have gaps because Forex is indicative pricing, unlike stocks and commodities where there's, for every bar, every point on the bar, there's a buyer and a seller that's recorded by the exchange. Since there's no central exchange in Forex, these candles are indicative of where price is trading. It could be a price at the airport, could be a price at the local, somebody's credit card. There's $6.1 trillion in transactions, and they're not centralized. So these prices are indicative. So that's why we have these big, wide-ranging candles. Instead of having a gap, they just kind of like take a crayon and they color it in, and then price comes back and fills the gap. So that's what we're looking for, a gap fill. Anytime I see vertical bars like that, well, it means that price ended up here and closed here, and they filled it in. And there may not been, you might have had a stop there, and your stop was completely missed. Because why? There wasn't anyone at your broker that was selling, but someone down the street was selling, but they weren't selling. They weren't buying from you though. So that's why be at the brokerage, people will call in, oh, my stop, you guys are criminals, your stock, you missed my stop. It's like Forex charts are indicative, and they're not actual. They may not be actual orders at that price point, right? So that is one of the sticky things with Forex. So be careful out there. But we do have we got like an inverted head and shoulders pattern, which is pretty. You can see it, right? And there's some people that think that the Fed is over tightened, and maybe they're not going to raise rates anymore, right? So we move that there, move this here. There we go, right? Something like that. Yeah. So we got our left shoulder, the head standing on its head, and right shoulder. So we have this inverted head and shoulders, and then we have a neckline. The way technical analysis. If you study technical analysis, the study of price, studying price action, and you measure from the top of the head to the neckline, right? And then you take this line, you're going to clone it like a sheep, and then you're going to take that line and add it to the breakout point above the neckline. You'll get, usually, wow, that would be a massive price target if we broke out from this zone of resistance. 46.20, that's like 2,100 pips away, right? If we broke that from that pattern and made this market turn like this, right? So I am bulls versus bears. I am bullish the pound versus US dollar. right? And looks like we go higher. At least if we got to 45 or 25.92, it'd be pretty nifty indeed, right? So risk on, and then typical the January effect is risk on during, dollar usually weakens during January, right? We might get a little bit of a bounce in the dollar, short-term bounce, but these are very anti-dollar pairs which could rally significantly. Okay, let's go to the Canadian dollar, and that's for the big, in fact, we can go CAD yen, or we can go USD CAD. I'm going to do the major pair, and then we can actually look at another CAD pair, CAD yen, and we can see. I'm going to remove all drawings, and you can see that this baby is setting up to drop like it won't stop, right? We had an uptrend, now we're on the other side of the uptrend, now we're in a downtrend, right? We had higher highs and higher lows. Now we have a lower high, a lower low, a lower high, a lower low, and now we're setting up in a downward trend channel. And you can try to say that 5 times fast. Downward trend channel, downward trend channel, downward trend channel, channel. Anyway, you get my point, right? So we've got something like that. Then if we have this channel, then we look for somewhere down in here to get hit, where the Canadian dollar will continue to rally, and we could see a move maybe down here. So bulls versus bears, dollar CAD. I am a bear, extreme bear. All right. You can see that, in fact, we can have a trigger point. We can have a trend line across there like that, and we can see that actually taking. Now let's take it. If you want to cross references, let's look at the CAD JPY. Again, JPY has negative interest rates. Canada has their interest rate announcement, and they're supposed to be raising interest rates from 4.25% to 4.5%, right? And then here we go. What we've got. Now we have been going lower swing highs, lower lows and lower highs. However, we've got that kind of thing I was trying to show you on the US dollar, which probably won't, it may go even lower. It may go down to the 618. But this one looks particularly strong. We're at the 38% retracement. And we could see that we have broken, we are trying to break trend lines. We've been breaking trend lines, broke this trend line and trend line. If we get a break above 97.29, we could see a rally back to 101.64, which is not bad. It's like 500 pips away, right? And if we just say, well, Greg, you're a scalper, right? I am a scalper. Well, we're trying to bottom out. You see that price is trying to put a bottom, and it's this may not be the best pair really, because there's lots of people trying to buy the yen, thinking that the yen is going to reverse, and a lot of things in the news saying that the Japanese cannot keep weakening their currency, and maybe there's some. So we might want to even try another currency pair. Maybe you want to try, NZD CAD, NZD CAD, or pound CAD or something like that. Maybe even pound. Let's say GBP CAD, right? Even take a look at that, right? And you can see a couple of things here. Now we do have pound data coming out. So pound data could take this thing north and make a double top, and then the CAD data will come out, and then after the double top, we could see this return back to this old low down here that we saw back in early January 2023 around the 1.6150 area. I'll just be careful, because remember, you're going to have UK data coming out, which will probably take the pound CAD in one way, and then you're going to have CAD data taking the pound CAD in another direction. Okay, so there we go. So we've got CAD. You can and you can just scroll through the CAD, look for, okay, I know CAD news is coming up, and you can see, there's a, we've got lower high, higher low. You might see a double top here and a drop because you have CAD, Kiwi CAD data coming out, and so you might want to try some CAD CHF, because I don't think they have any data coming out where we can actually see what will go on there. And so, we've had multiple bottoms there, and then we've been, been trending down on this. So we'll see if we get something like that. That looks a little complicated as well. So you might be just safe sticking with the CAD JPY or USD CAD, right? And then going back to our euro for the Friday's data that we have coming out, or for the US data. Again, we are this thing is flagging, big flagpole, tight consolidation right here. Tight consolidation, right? So this thing is flagging, and so usually when price comes in one way, it goes out the other way, almost like hot chili peppers. You eat those things, they come out hot too, right? This can come in hot and go out hot, right? And it's already coming out hot already, the consolidation and a break. So already the euro is looking bullish as well. Okay. So I hope that was pretty helpful to you, and that you have found some use in this analysis. And feel free to come and visit us at Elite Traders University, and check out our that's not it. Okay. Yeah, come over there to Elite Traders University, and then we have a free ebook there. You can get our Income Boost ebook. You can check out our free masterclass. You can even apply if you feel that I'm someone that can help you reach your goals. Like I helped a number of students reach their goals as well. And I'd love to have you on board. I'd love to see you. Also, check out my market heat map. Arrangement of currency pairs by percentage change. Tells you what's hopping, what's popping, what's dropping, what's not. And we've got this bear here. Oh my goodness, this bear. Hide the bear, right? Okay. All right. Anyway, guys, peace and pips. Happy trading. And make sure you sign up for your free masterclass, and sign up to talk to a member of my team. And if you want to enroll, we're having an enrollment special, 50% off our normal tuition. We've raised tuition for 2023, but we're having a special mid-month special, January special, where you can get half off to learn from me. And also it includes a search trader audition worth $100,000, and we help you pass that audition. Okay, so with that said, peace and pips, happy trading. This is Greg McLeod of Elite Traders University signing out, and with my market heat map as well. I wish you all the best. God bless, and I love you. Thank you for watching. Thank you for subscribing, and liking, thumbs upping, and all that good stuff, and sharing it with someone else. Okay, take care. Bye-bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!